Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HILTON Worldwide Holdings INC quarterly report. Hilton Worldwide Holdings Inc. offers a diverse range of businesses and services through its portfolio of hotel brands. The company's operations include hotel management, franchising, ownership, leasing, licensing of brand names, trademarks, and service marks, luxury hotels, Waldorf Astoria Hotels and Resorts, lifestyle hotels, Canopy by Hilton, Curio Collection by Hilton, full-service hotels, Hilton Hotels and Resorts, Embassy Suites by Hilton, Focus Service Hotels, DoubleTree by Hilton, Hampton by Hilton, All Suites Hotels, Homewood Suites by Hilton, HomeTwo Suites by Hilton, Timeshare Properties, Hilton Grand Vacations, Economy Hotels, True by Hilton. The company operates in various regions worldwide, including North America, South America, Central America, Europe, the Middle East, Africa, and Asia Pacific. Hilton Worldwide Holdings Inc.'s stock price has increased by 13.9% in the past year due to several key factors. The company's strong financial performance and positive outlook have driven this growth. Notably, Hilton exceeded analyst estimates with its third-quarter earnings of $2.11 per share and revenue of $3.12 billion. Its luxury brands, such as Waldorf Astoria and Conrad, also reported significant gains in revenue per available room, RevPAR. The company's optimistic guidance for the full year 2025 and strategic growth initiatives, including an expansion of its development plans to over 515,000 rooms, have further boosted investor confidence. Additionally, Hilton's share buybacks have positively impacted stock value. Overall, these factors have contributed to a rise in investor optimism, with analysts maintaining a positive outlook on the company's stock. The primary drivers of revenue growth or decline for a company can be identified through an analysis of its financial summary. In this case, the key factors contributing to revenue growth include cost reimbursement revenues, franchise and licensing fees, management and franchise segment, and Hilton Honors guest loyalty program. These drivers have resulted in significant increases in revenue, with some segments experiencing growth rates as high as 25% and 83%. On the other hand, certain areas have led to a decline in revenue. Incentive management fees and base and other management fees have decreased due to various reasons. Additionally, franchise and licensing fees have also declined due to investing activities, which have been impacted by acquisitions and capital expenditures. Overall, these drivers highlight the importance of cost reimbursement revenues, franchise and licensing fees, and Hilton Honors guest loyalty program in driving revenue growth for the company. Conversely, incentive management fees, base and other management fees, and investing activities have contributed to a decline in revenue. Net income and profit margins. A shift towards growth. The financial summary reveals a significant increase in net income for the 3 months ended September 30, 2025, rising to $421 million from $344 million in 2024. This trend continues over 9 months, with a net income of $1.163 billion compared to $1.034 billion in 2024. Profit margins also show an upward trajectory, with net income margin increasing to 13.5% for the 3-month period and 13% for the 9-month period. This growth can be attributed to revenue expansion, particularly in franchise and licensing fees, which rose by 5.9% and 7.7%, respectively. The adjusted EBITDA margin also experienced a notable increase, reaching 100.2% for the 3 months ended September 30, 2025, from 92.3% in 2024. This improvement is likely driven by the company's ability to manage costs effectively while maintaining revenue growth. Overall, these changes indicate a positive shift towards increased profitability and financial stability. The company is generating a significant amount of positive operating cash flow. In the 9 months ended September 30, 2025, net cash provided by operating activities reached $1,926 million, a substantial increase from $1,431 million in 2024. This trend indicates that the company's operations are producing sufficient cash to cover its expenses and investments, positioning it for long-term financial stability. The company's debt level and interest expenses have undergone significant changes over the past year. In terms of debt level, the long-term debt has increased substantially from $10,616 million in 2024 to $11,726 million in 2025, representing a rise of $1,107 million. This increase is also reflected in the total indebtedness, which stood at $11.7 billion as of September 30, 2025. On the other hand, interest expenses have decreased significantly over the past year. The company's interest expense decreased by $19 million in 2025 compared to 2024, and has continued to decline with a decrease of $2 million in 2025 compared to 2023. This represents a notable reduction of 13.6% in the 3 months ended September 30, 2025. Overall, while the company's debt level has increased, its interest expenses have decreased significantly over the past year. Management is optimistic about the company's outlook, expecting continued growth with 235 million members in Hilton Honors. However, they acknowledge that macroeconomic factors beyond their control may pose challenges. To mitigate this, the company is expanding its management and franchise segment through licensing of IP and / or use of booking channels. The strategy focuses on driving revenue growth by managing hotels in ownership segments and expanding the global hotel network through fee-based business, new contracts, and growing regions. Capital allocation will be guided by industry trends and competitor performance, with a focus on preserving capital and maximizing returns over the long term. The company has demonstrated its commitment to returning value to shareholders through 2 key initiatives: dividend payments and share buybacks. Specifically, the company has paid out cash dividends in both 2024 and 2025, with a total payout of $108 million and $113 million respectively. Additionally, the company has engaged in significant share repurchases, buying back approximately 9.7 million shares for $2.4 billion as part of its ongoing share buyback program, which has a budget of $14.5 billion. That concludes the financial summary for HILTON Worldwide Holdings INC. Feel free to comment below, and I will be happy to answer them when possible.